Welcome to Canadian Mortgage Weekly. We are here in this thunderstorm of a day for episode 28. I'm really excited to be doing this video. And as always, you guys know me, Sam Thompson, but we'll just introduce Joe before we get too ahead of ourselves. It's good to have you with us, Joe. Joe is a mortgage professional in the Barrie Simcoe area, but serving all of Ontario. Joe, you've been in the industry for over 10 years. You know, you've got a plethora of experience and knowledge. So these videos have been really great, doing them with you, getting some insight and all the information you have. So thanks for joining us today again, Joe. How are you doing?
Hey, not too bad, Sam. Thanks for that great introduction. It's really good to be here as well. Canadian Mortgage Weekly, episode 28. We got some really good content today, you and I. So I'm really excited to get into that. But yes, thanks for the introduction. Sam Thompson, he is a mortgage professional in the Barrie Simcoe area as well. Sam moved here from Ottawa just over a year ago, is married, lives in Barrie. Really has been rocking mortgages, and he's gotten into the industry. He's been in the industry now for over a year as well, and dealing with a lot of our first-time home buyers, and also with a lot of our other files these days as well, Sam. So welcome to the show.
Mm-hmm. Yeah, I'm excited to be here. It's crazy. We're already at episode 28. It
I
feels
know.
like it really hasn't been that long since we first started doing these. But yeah, like you're saying, we've covered off some awesome content.
Yeah, we really have. Yeah, over this year, we've covered off. We had some really good guests this year. We've had some good series that we've gone through, and looking forward to today's content. But yeah, it's been really good. I think the show is something that I enjoy doing. So here we are.
Yeah, so I guess before we jump into today's topic, we like to cover off with some mortgage news, things that maybe are, a bit of a buzz that you maybe have heard. And we have some really exciting news from CMHC, don't we, Joe?
We definitely do, Sam. And I thank Terry Lynn for finding this news and texting it to me in the evening there, because it's just fantastic. What's happening is CMHC has reduced the minimum credit score required for purchasing a home from 680 to 600. So, Sam, you know that opens up a lot of possibility for a lot of our home buyers.
That does. Seeing anything changing that's making it easier for people to qualify is music to my ears, and it makes all my conversations with first-time buyers so much easier.
That's
Um,
right.
yeah, because even the other two mortgage insurers were still at 650, but CMHC chose to make it more strict and kind of jump up to 680. So the fact that they're now even lower at 600 is awesome to hear, especially in when people are recovering from COVID and any financial credit issues they might have had. It's really awesome that they have that minimum score now.
It really is, Sam. Yeah, it opens up so many more buyers to the housing market.
Mm-hmm.
And another really amazing thing is that they didn't only do this, but they also increased the debt ratios to match the other insurers, which will allow CMHC to evaluate applications more competitively.
Hmm.
And also, that a change takes effect immediately. So
Wow.
it's already in effect.
Yeah. Yeah, that's awesome. That's honestly the other, hand in hand issue that I tend to run into with first time buyers is, those debt ratios sometimes can get the best of you and they can limit you from what you qualify for, especially, if it's more strict or more conservative. Even if you have the capability to qualify for more, that
Mhm.
debt ratio can kind of keep you below being able to enter the market. So these are great changes, especially for first time buyers.
That's exactly it, Sam. Yes, good point. So this will apply to all mortgages for that are insured, and that would be for any purchasing for anyone purchasing a home with between 5% to up to 20% down. Obviously, when you hit 20% down, lenders do not require, for the most part, any insured mortgages at that point.
That's right.
Yeah, and there's another really cool trend we've been seeing, Sam. I
Hmm.
mean, we've been seeing this trend of everyone working from home over the last year. We've been seeing a trend of everyone, uh, you know, building their spaces at home and outdoor
Hmm.
spaces. And there's a lot of articles, one we looked over together about how pools and backyard spaces are really gaining popularity, which kind of fits well with the series that you hosted a few weeks ago.
Yeah, that's right. I mean, it went from something that seemed very extra and, a non-essential, but I think like you're saying, we're seeing everything. I guess people's priorities are shifting, like you're saying, with work from home being more common. You want to start, building up your living space and how much you can enjoy and how much you can take advantage of where you're living. And exactly, we hosted, if anyone was watching, a spring into summer series, and our first episode was how you can, get a fence, a pool, a new deck, all just from refinancing your current home. So it fits really hand in hand. So if you're on the millennial train that is looking for a pool at your work from home office, definitely check out that video. It'd be
Yeah,
awesome if the office had a pool in it. That would definitely make the livability a bit more exciting and fun.
exactly. That would be nice, right? We would be able to cool off during those really stressful days.
That's right.
Midday, right? So,
Yeah.
uh, but I'm sure a lot of other people have the same idea because pool sales and pool installations have gone up quite considerably,
Mhm.
and it's been something that what we're seeing a lot. People are funding that improvement and renovation in their home by refinancing their mortgage,
Mhm.
and also getting that better rate. Which also we've done series on that where people actually do that with a lower rate. It actually ends up being the same monthly payment.
Mhm. With the
Yeah.
addition of a pool, so it's a win-win.
It's a win-win. Yeah, it's pretty awesome. So, yeah. So before we get into like the actual presentation, like if anyone has any questions about any of these topics that we're chatting about, definitely drop a comment in the comment box or send us a private message, and we can look at what the qualification change means for you,
Mhm.
or Sam and I can look at, even if you are looking to install a pool or a deck,
Yeah.
we can look at how much you can afford there. But yeah, so getting into today's episode, Sam, I know you're presenting a really good topic there about, well, why don't you tell us a little bit about it there?
Yeah, so for episode 28 today, we thought, we were sort of looking over what are some topics to cover that are topical, that would apply, directly to a lot of buyers. And one thing that we found is that, similar to a lot of the mistakes first time buyers make, there's quite a few mistakes that we see in the document side, which is, the less exciting side. We don't talk about it as much. Normally it's about the rate, the bottom line, down payment, what you qualify for. But once you have actually put in an offer and, we're looking at getting the conditions all satisfied, that's where we can actually run into some issues. So today our video is going to be focusing on how to sort of steer clear of issues that could arise as you're submitting your documents for your mortgage. So I will go ahead and just share my screen here, and
Yeah,
then
that's
I can get into today's video.
awesome. Thanks, Sam. Yeah, that's a really good topic, and really looking forward to getting in and sharing with everyone exactly what sort of delays a file and what can make it a smooth process for them.
Absolutely.
Yeah, yeah.
Alrighty.
Okay, I can see your presentation.
Great. Awesome. So again, yes. So how to delay your file. So again, we're going to be covering off all the mistakes that we see people make. It's, sometimes they're honest, harmless mistakes, and sometimes it's just maybe a little bit of due diligence that's missing. So I believe there's about 9 mistakes that we'll cover off, and we'll just chat about, the process of how you can change it to help speed it up. So before we jump into the examples, let's just cover off why are documents important? Why are Joe, myself, and Terry Lynn asking for, a laundry list of 15 different documents? Well, it presents accurate and straightforward information. The lender is going to require all of these. We're the middleman. It's not us. Don't get mad at Joe and me on the phone when we're asking for updated T4s. But it really does speed up the process and makes it more stress-free. There's a few files we've worked on that, we've been able to get it completely broker complete, meaning that you don't have to chat with me anymore. We have all of your documents, everything satisfied, maybe a few days after sending in the initial application. So what that does, we've seen the direct effect. I'm sure you have as well, Joe. There's just the sense of relief that definitely comes over Joe and myself and Terry Lynn, but also we notice the clients are a bit more relaxed. They can breathe. They're like, okay, everything's satisfied. And it also, the benefit of getting your documents in up front, getting them all in timely, is it highlights any issues. If we need to add additional supporting documents, we now know that, rather than getting the document 3 days before closing and realize it doesn't satisfy, then that just opens up a whole can of worms and stress. So it's actually really important to have all of your documents in and without any errors.
That's right. Yes, it really helps with that, and especially with noticing things up front too. Sam, you mentioned that there is sometimes a document that can come in, and maybe it could be a pay stub and a letter of employment, and maybe one document is missing some vital piece of information, right? So if we get that earlier than later, at least you, me, or Terry Lane can look at that and advise the client beforehand, hey, you know what, we just need this little piece of information added or something like that. And
Absolutely.
just smooths the process. Yeah, it avoids any delays last minute.
Yeah, especially because we know what to look for some of the documents. And that's where a lot of the mistakes that I find arise, especially with first-time buyers, is they don't necessarily know what to look for or what would be a red flag. They think they're doing it all right. They've never bought a house before. So this list is really going to be great to help, give you a overarching sort of idea of what it all should look like. Alrighty, so let's hop in to our first problem that we see most often. Smartphones are great, screenshots are not. We really need to, it's an issue. If it's a screenshot, the lender will not accept it. It needs to be, on letterhead. It needs to be a statement. I mean, you can see here, it was just a screenshot from their phone. It has the account number and the balance, but it's not an actual statement. It doesn't have their name on it anywhere. It doesn't have any date range. It just gives us a really limited information.
Yeah, it really does. And, I've been getting these types of screenshots for years now, Sam.
Yeah.
And sometimes we even advise, this is what we need, and we still get the screenshot.
Right.
But you're right. I mean, it's hard to notice that there's not really any information on here, because to even myself looking at my phone, oh yes, the money is there. This is going to be fine for the bank. But at the end of the day, you're right. There's nothing really identifying where this money has come from, which is what the bank is really looking for. And when it came in. So that's all information. Really good. You got to get the date on there and the name, and what else you mentioned there, the account number.
Right. Yeah. Yeah. And so again, you brought up a really good point, Joe, that, it's easy when you're looking at it to know that, okay, the money is there, it's mine, I'm on the app right now. But what we're trying to achieve is communicating that to the lender so that they can look at this document and know whose it is, what the transactions are, where the money's coming from, what's the date, what's the bank. They need all of that. They can't rely on, you or myself saying, hey, it's them, don't worry about it. So definitely details and specifics are really important.
Absolutely. Yeah. That's a great point. And it's not like it's going to make or break your file. It's just they need to know the source and see the transactions. And they're not going to use that against you if you're purchasing things at certain stores. The bank's not really going to care about your shopping decisions. They're just going to care about your deposits and where the money is coming from. So make sure you send full information, and it's all going to be very smooth.
That's right. Well, let's hop into problem number 2, which is going to be missing pages. It's hard to see in the picture, so I've added a nice red arrow, but I don't know how many times, Joe, we've gotten in a page 2 of 2, or even just page 3 on a document that's actually 6 pages long. The lenders have policies that if they receive documents, they need to receive the full document. So that includes pages 1 through 6, even if you think it's irrelevant information or it's just the title header page, they need full documents. And this also can be a mistake as well, just by missing, 1 page is missing or 2 are.
Exactly. Looking at this document, I know what this document is, and often we will only receive page 1 of 2 on this document, even though, like you're saying, everything is blank on page 2.
That's right.
There's not really any additional information, but really the additional information is the second page, and that's what it's needed. So yes, absolutely. Good point. Client may think, oh, lender has all the important information they need. But from our and the lender's perspective, the lender sees, yes, we see the information, but we don't have the complete information.
Right.
And that's unfortunate because it can delay a file. And
absolutely.
Yeah, and it can cause a lot of frustration last minute. So this is a good point to bring up as well. Thank you, Sam.
And problem number 3 is no dates. Or even on that count, no signature. So here we have a employment letter from a John Smith, and you'll see that it is missing a signature from, the letter of who it's from, the employer, as well as it's not dated. So that's one of the biggest things that I think I see tripping up people's employment letters, is they all need to be dated within 30 days of once the lender has received your application for an approval. So we can't use, an employment letter from when you were chatting with CIBC 6 months ago to get an approximate mortgage. It does need to be all up to date within 30 days of the application.
Yeah, it's a good point. And when we're doing a pre-approval, we quite often require this letter. So when you're asking for this letter from your employer, just let them know you might need a second updated letter 2 or 3 months down the line when you've actually found your home.
Absolutely. And actually just came to my mind now that on the topic of employment letters, being timely and upfront with those is huge, because a lot of the other documents, you already have them. It's on you to provide, T4s, identification, bank statements, but employment letters sometimes are out of your hands. It could take your employer, 4 business days to get it to you. So all of those delays add up to us, not being able to submit your file, or the lender being without those documents. So kind of being ahead of the game and proactive, especially for employment letters, is really important to save you some time.
That's a great point, Sam.
Let's hop into problem number 4, which is going to be getting T4 slips from the CRA website. So this happens, I think, almost every file I've worked on recently. It all comes in just like this. You would think that it's acceptable because it's from the government of Canada, it's from the CRA site, but again, in the same issues we've seen before, it's just missing a lot of crucial information. So typically it will also say what the employer's name is, but it also doesn't show who the employee is. It doesn't state anywhere that it's your T4, and it also doesn't have any SIN number to connect that this is you, identifiable by the name as well as SIN number. So again, it's just missing information.
Yes, and although it is easily accessible and providable by the client, and the client knows that the numbers are there, we know that the numbers are there, and the lender knows the numbers are there, like you're saying, Sam, it's just an identification issue. They just need to be able to match it properly up with you as a person, with the SIN number and the name.
Yeah, so even if it takes you a little extra time to hunt down your T4, if it's in the bottom of a drawer somewhere, definitely invest time to get your actual T4, or even contact your employer to get that information resent, because we do need that. This may be able to help us get you some rough numbers, and we can use the numbers in here, but when it comes time to submit, we'll need an actual T4 to actually prove to the lender that income.
Okay.
Problem number 5 is outdated documents. So we're using the exact same document as the previous example, but we do need documents that are relevant to when you're applying. So if it's T4s, they'll want the previous 2 years. So again, you can't send in your 2018, 2019 T4s when we're now in 2021. It needs to be dated properly. And this also goes as well with old employment letters. If you got one that has an old date, it does need to be updated to reflect accurate and recent information.
Yeah, it's really important to get that information accurate and updated. You're making a really big decision on buying a home, putting a big deposit down. So it's nice to have all those details firmed up and pre-approved for you before you're going ahead on that. So yes, you're right, Sam. Having an outdated document, we might see, yes, in 2018, you made X amount of dollars, and right now it's either that or more, but it's still not going to give us or you, especially you, making that big decision, a firm idea of where you stand. You might be also missing out on some mortgage money that you could have been approved on.
Absolutely.
Yeah, great point, Sam. We see this a lot, unfortunately, but good point.
And problem number 6 is going to be if you submit documents where pages are cut off. So here we have our very own pre-approval letter that you'll receive if you get pre-approved with our office. And you can see down at the bottom where it's talking about down payment, you can hardly see it. It is cut off. And we do see this a lot, especially if, the documents maybe have been faxed from your employer and it went in the machine crooked. So there's sections that are cut off or maybe a corner's missing. But again, it's the same song and dance. We need all of the information and all of the documents to be present. Yeah,
exactly. I see this a lot too. We'll see a document and perhaps not the whole thing is cut off. Maybe 98% of the document is viewable, but it could be just the corner. And in that corner, it's not that the lender is worried about seeing that blank corner. It might be blank, right? It's just the lender's concerned about maybe there is information on there that you don't want them to see. Right. And it could work both ways. So it's really important that we get that. And that way, it also avoids us sending in a full document closer to closing date and all of a sudden something happening that they didn't notice before and changing everything last minute. So again, it's just a convenience issue to make sure everything goes smooth. And Sam, we as an office always make sure that we get back to clients that this is cut off and this needs to be resent, but that can happen sometimes like an hour or two or maybe a little later. Just doing it up front on your side as a client can save that turnaround time and avoid that extra delay.
For sure.
Yeah, so it's really important. Dates, cutoff pages, even just missing that page 1 of 2 part at the bottom.
That's right.
It's really important.
Moving on to problem number 7. We've seen this a few times. I haven't seen it too often, but we have received handwritten notes. And this is definitely something that the lender is not going to accept. There's no way to prove that it's at all accurate. I think the one that I saw, we had a client writing in the different rent amounts that were received from tenants that were renting from, a property that they had owned. And I don't know, maybe you've seen this as well, Joe, people submitting some handwritten notes to you.
I have, yes, for that as well. Property tax amounts, these are my property taxes on my home. It's $4,000, this much per month. Right. Or I've even seen, this is my mortgage details, how much left, maturity date. Thinking that as a mortgage broker office, we're going to have that information and be able to pull statements from all the different lenders, no problem. But it doesn't work like that because of privacy. And we actually need those documents. We need the mortgage statement. We need the property tax bill. And it might be cumbersome sometimes to provide those items, but we can help. If you can't find them, let us know. We can connect you with services that can order them for you.
Absolutely.
Yeah, but that's interesting because we still see handwritten documents even in 2021.
That's right. And problem number 8, is at any point if we receive documents that have redacted information. Again, I think, Joe had kind of mentioned it when we were looking at bank statements. There's some things that, our clients might not want anyone else to know that they're spending, $600 a month at Tim Hortons. So sometimes it's bank statements that have redacted sections. Sometimes it's letters. But really, we do need all of the information. We can't accept documents that have any redacted notes, any information that is hidden from the lender.
Yeah, and really at the end of the day, it's also not only to make it easier for the lender, but to make it smoother for you and for us to be able to get back to you with a firm answer quicker and faster.
Absolutely. And that is the end of all of our issues that we went over. So, I mean, we've gone through a lot of varied problems that we see, but they're all very common. And I think the bottom line for it is just having that little extra due diligence, just to make it more, efficient, more stress-free, and just an easier process all around. Because like you're saying, sometimes, even if we, let it go on and we miss that, the date's incorrect, that can cause problems later on down the road. So it's not really like you're slipping one past, us or the lender. It's really going to save any issues that could arise in the future.
Absolutely. Just having everything, just making sure you as a client are doing a check before you're sending things, making sure it's all accurate, making sure that when you have scanned it in, it's fully there, making sure that the statements have your name and an account number, and reaching out to Sam or myself or Terry Lynn to see if we can help you get the statements that you need, because speed is very important to us. We want to be able to get back to you quickly and efficiently with an answer back on your financing so you can be ready in this quick market. And with any incomplete documentation, it's just going to force us to pause on that and say, we're still waiting for this. We're still waiting for that. We need to verify this, and we need to verify that, and we need to confirm this, and we need to look into that.
Yeah.
And then as a client, I mean, that can mean a lot of frustration on your part, but it's like you're saying, Sam, it's not us that's asking for it. It's the lender. So if anyone has any questions right now, feel free to drop a comment in the chat or send us a private message. Thank you very much, Sam, for that very informative presentation. I really appreciated that. We had some examples to show as well to everyone today with what we can, what common issues are.
Yeah, it's really important. And again, it's not us that's asking for it, it's the lender. And again, just being timely about it. If we do get back to you that, a document needs to be resent, getting started on that, and being proactive often, removes a lot of the headaches and a lot of the stress that can surround the document fulfillment side of everything. But
yeah, exactly. So definitely reach out to us, Sam, myself, or Terry Lynn, to get ahead on your documents. If you want to get pre-approved, reach out to us. We can get started and let you know what documents we will require on your specific file. And feel free to leave a comment below or send us a message. But for next week, we have some exciting stuff to talk about. Next week, we have the interest rate announcement on Wednesday.
Yes, that's going to be awesome for anyone with a variable mortgage rate or variable car loan, lines of credit, anything like that. It's going to be good. So tune in to Canadian Mortgage Weekly. We will have live coverage on the day, informing you guys of what that change is.
Awesome. Yeah. And then it'll be another episode on Thursday with a topic. So looking forward to seeing you then too. But thanks for watching, everyone.
Yeah.
And we'll see you next week.